So guys, TV Millie, I'm back with another one. So family, a massive week ahead of us. We know Wednesday, tomorrow, we do got the federal rate decision, Facebook Meta earnings. Thursday, we got Apple, Amazon, Google, which I'm very interested after seeing the Tesla earnings. And then Friday, we got the U.S. job report, hoping to get more unemployment. I know that sounds bad, but bad news is good news, and good news is bad news. So if you like these market updates, these altcoin updates, make sure you like, subscribe, hit the notification bell, and keep your favorite crypto and daughter or entrepreneur, and leave a comment, family. It really helps the algorithm. So big week still ahead of us. I know we're midway. It's 2 for Tuesday, double update, but we have to keep our ear to the streets as far as the macro environment. You can see here, USTs may also benefit from the Fed next week. The Fed is widely expected to slow the rates at 0.25. Powell will likely emphasize that a slower pace of hikes does not signal the Fed's job is over. So people are expecting Powell to still be a little bit hawkish, even though they are lowering the rate hike. Now, family, I know a lot of people get bullish when they hear, oh, Millie, well, the rate hike is being lowered. But understand, family, Fed rate hikes and quantitative tightening is still bad for the market, no matter the size. And these are some of the points I want you to focus on why. So higher interest rates can lead to decreased borrowing as the cost of borrowing becomes more expensive. We're seeing that through car loans, credit card loans, etc., etc. Two, higher rates can decrease spending as consumers and businesses have less disposable income. So as everything gets higher as far as food, spending, supplies for your business, etc., etc., you have less disposable income to actually make investments into the market, where you'll see more people going towards cash. Cash is king, and moving away from high risk assets. Three, increased saving and decreased spending can lead to decreased demand for investments, causing a decrease in market liquidity, which we're seeing right now because a lot of people are wondering, like, there's got to be manipulation. Where's the liquidity coming from? The economy is weakening, etc., etc. Four, quantitative tightening, or the process of decreasing the money supply by reducing the amount of excess reserves held by banks, can also leave people with decreased market liquidity. So again, you can't get these loans through the banks not giving away money. They kind of like tightening up that vault there for businesses, small businesses, to actually get those loans and liquidity to actually invest back in their market, which makes these small businesses have to use their own personal cash. They have to use their own personal profit to reinvest into the business and keep the businesses going, which cause decreased liquidity for what? Your investments. And number five, the combination of higher rates and decreased money supply can lead to a decrease in market liquidity, making it more difficult for business and individuals to assess credit. And I've been seeing a lot of people, just everyday people that I talk to, saying, well, I'm behind on my credit card bills, or every time I get behind on this bill, they add a little bit more interest, or they add a little bit more tax for it, and it becomes even more. So that's another reason, because a lot of people, they don't want to have that debt. So instead of having that debt, they'll choose to pay their credit card bills opposed to investing into the crypto market or the traditional finance, because it's, they say the one thing about when you start investing, make sure you don't have any debt. So a lot of people trying to keep that debt down. And if you miss a little payment, they will tax you. They will add that interest. And a lot of people are trying to move away from that. And that's why we're seeing so little volume in these crypto pumps and so little liquidity. A lot of people think it's a lot of wish-wash money right now in the crypto space, going back and forth between the homers like us. But again, we'll just have to see how the FOMC meeting goes, and if Jay Powell himself plans on being hawkish or dovish. All right, this is an example what to look forward to. So for instance, the market will, and let me, 𝐦𝐨𝐬, this is 𝐦𝐨𝐬. He always leaves some good alpha, but he says the market will likely overreact regardless of the direction. 2, 50 points, throw unlikely equals a good short. 25 points and clear dovish guidance equals a good long. So that's what a lot of people are betting on today. They're like, okay, let me consolidate my portfolio and get ready to make a good long if we get dovish guidance in a 0.25, and then 0.25 mixed guidance is kind of like a neutral. Market expect heavy volatility. I've also been paying attention to the DXY here. You can see it is creeping back up. So you want to keep your eye on this, family, because when we go here to the weekly charts, the Elliott wave here is showing that the DXY wants to curl back up on the RSI, which would be negative for the crypto market and traditional market if we bounce off this 100-day SMA on a weekly, which means that we are heading up. Now that isn't necessarily a bad thing, because if we head back up, the crypto space will award us more opportunity. The only thing we don't want to see is a higher high from here. We want to see a higher low and a lower low just to confirm that we are in the downtrend. So I would like to see this purple line hit this yellow line and retest, and then head to the downside. And of course, if we can get this DXY anywhere between 190 and, well, I'll say 180, that would be very, very bullish for the crypto space and even traditional markets. So remember, the lower that the DXY goes, the more bullish for crypto, but the higher the DXY, the more bearish for crypto, as more people are moving into the dollar, US dollar, and not high risk assets. So definitely keep that in mind. Always have this chart on speed dial, but I also would like to check out Coinbase here, and shout out to my boy Vision, because he actually put me on this metric, Coinbase. Now Coinbase, we want to see Coinbase over 50. We did, if you go back here to year, we did get a low here of 33 from Coinbase. So that was the yearly low, and ever since we've been moving up to the upside, but it looked like it may have peaked here and could be headed back to the downside. So a lot of mixed signals in the market. As you see, we didn't get a, okay, well, you could say that we got a higher if you want to look at us breaking the downtrend here. But when in doubt, zoom out. From a longer aspect, we didn't break the downtrend, the long-term downtrend. We still, it's a little hump, but maybe we move back up to the upside. Maybe we move down. Again, it's just so much information we're going to get from the FOMC meeting. But experts say anything over $70 for Coinbase is bullish. Right now, we just have to see if it can continue to move to the upside. So that's another metric I like to pay attention to, because, Coinbase is a major exchange in crypto. And if their shares, their stocks is capitulating, normally we see the same movements from Bitcoin. So very, very interesting. Very, very interesting when comparing the Coinbase. And of course, we got the egg shortage. A lot of people, this is crazy. You see this video, y'all? Like, this eggplant caught on fire now. It's a conspiracy going around, but there is definitely a egg shortage. Let me know what y'all think happened right here with this eggplant. Do you think that it was purposely done to keep the prices of eggs high, or was this just a freak accident? I'd love to know y'all opinion inside the comments. So, with this, the food prices trying to come down, but still being a little tough. That's one of the points of inflation that I know, well, data, should I say, that I know Jay Powell will be looking at. So definitely keep that in mind, that inflation is not just oil, rent, or anything. It's food. It's a multiple, it's a plethora of things that come up with the data for core CPI. So just keep that in mind, family. But this is crazy. This is crazy right here. Eggplant. We already got an egg shortage, and then the eggplant burning down, and that's very crazy. And this chart right here, you can see that we are in staggering debt. So it took 215 years for the US to reach 7 trillion in debt, family, and in the last 2 years the US has added another 7 trillion in debt. So we talked about the car bubble, how that could use car bubble, should I say, that how that could specifically pop, and we'll see a lot of banks looking to go pick up their cars, you feel me, go repo those cars and pick them up. And we also got a lot of people that's behind on their credit card bills, as a lot of people have moved to credit, moved to debt, and we've seen savings account literally capitulate. So hopefully y'all got a good feeling of the market. To me, it's bipolar. I would be a little bit careful. I'm personally looking for the federal rate cut and the market to capitulate from there, and maybe we'll get like a 10K, 14K Bitcoin. But a lot of people feel like we can just, if we get dovish, If 𝐥𝐤𝐤 is extremely dovish and we get a 0.25, we could see something like 35K Bitcoin within the next 2 to 3 months. Let me know in the chat, man, what y'all think. Can Bitcoin hit 50K by March? You feel me? I've seen some people calling that. Y'all let me know what y'all think in the chat. But taking a look at some of our favorite altcoins, you can see here Elon up 1% on the day. You feel me? A lot of volatility going here with Elon. We got Tectonic still up, 1% on the day. Still, look at this, a lot of volatility going on with these projects. Hedera, most of the projects around the same 1-2% on the day. And you're seeing here Bitcoin up 0.5% on the day and Ethereum up 0.35% on the day. So a lot of volatility. It seems like we are trading sideways. A lot of people want to pretty much wait and gauge what type of market we're going to have tomorrow, whether it be bullish, whether it be dovish. And y'all let me know what y'all are doing, man. Are you longing? Are you shorting the market? Are you staying neutral? Let me know in the comments how y'all feel about today's market and what type of game plan you're looking to have going into the FOMC meeting. It's your boy 𝐦𝐨𝐫𝐞 TV. Millie, I'm out.